Hi, Larry Gaines, Power Cycle Trading. Well, last Wednesday I sent out a long trade setup on Palo Alto. So we were worried about the market. We're in a kind of a downtrend, as you can see here on the daily, on the QQQ, the SPY, the Russell, the Dow. And last week on Wednesday the 4th, we had a nice little retracement rally. So we found one trade setup that looked pretty good, was to go long Palo Alto, but we were concerned that the market might, retrace up here, short covering, then roll back over. So this is the trade setup, and I wanted to revisit it to show you exactly a couple of things that you could have done to adjust this trade. So last Wednesday we were looking at Palo Alto, and we had a reversal signal starting to take place on the 4th. That was Wednesday. You can see on the 4 hour everything was looking good. We had positive momentum cycle 1 and 2. So one idea was to go long Palo Alto and do it as a long call debit spread, but with the trading plan in place to hedge it once it took a pop to the upside, if it did, and then we could look at selling in out of the money bear call credit spread. So we decided to let's take a look, and if it does fire to the upside and take some momentum, looking at that 1272 extension here coming in at 195, then we could either take the full trade profit, or we could maybe adjust the trade, hedge part of it by selling an out of the money bear call credit spread. So we looked at selling this 202.5, 205, bring in some credit, offset and replace some of that risk with the credit received, and then stay with the trade, and also give us some different options as far as how to manage this trade. So let's take a so the setup was to do this week's expiration of 13 April series, the 190, 192.5. So really tight, narrow call debit spread. So set that up at 95 cents or $95. Now it had a really nice explosive move up to the upside the next day and hit that extension at 1272. So we took some partial profits at $1.80. And then you can see currently right now it's going to $1.35. So the other thing, though, to offset part of that risk, we were able to sell an out of the money bear call credit spread last Thursday when it popped up to that extension, brought in 60 cents credit. Okay, so that reduces the risk down of the debit spread down from 95 down to 35. So the maximum at risk to the downside upside is $35. And at Friday, this Friday the 13th of April, if it was to go out anywhere in between here from the 192.5 up to the 202.5, this trade would make $215 on a risk of 35. So that's a really good outcome. Or we could just close out the debit spread, take profit there, leave the credit spread on, and you can see it has currently about $45. So it's a great way to take advantage of theta decay, reduce your risk, and participate in a market move in a down market.